So I'm going to talk to you about Visa's role in 3D Secure, what we've been working on, but primarily in the focus of secure customer authentication for PSD2. But I'll give you a bit of a background as to what we're doing around consumer space, because I think they overlap extremely well. So uh, Visa's been in the payment industry for roughly 70 years now, and most of our interactions have focused largely on the consumer segment. We're starting to focus more on how does the merchant intersect in that environment, and we'll talk a little bit about that, but we see the consumer as center of how commerce is done. If you look at what drives commerce, particularly new factors of commerce, we're seeing adoption of new technologies, whether that's using card on file for interactions like Uber or the Amazon Go experience. Much of those interactions try to create invisible commerce for the consumer. And so we're seeing those two new type of payment methods, whether they're Apple Pay or they're invisible payments, enabling new forms of competition in the marketplace as well. And you're seeing new entrants coming into that space, asking for ability to service the same customer population, perhaps with even new customer payment methods. And so we're starting to see interest around bank-to-bank or account-to-account payments as well. I think that adds some acceleration as to how payments is starting to just come into the confluence of consumers being able to conduct normal commerce. You see a request of more competitors wanting to come into this space, and you see action by regulators, the EBA, opening up with open banking and payment initiation services to open up payments far broader than just the payment networks. And so we welcome competition in that space. I think there's actually a lot of new innovations that are driving into that space, and you'll start to see how we're thinking about that with at least 3D Secure 2.0 today. So what do we see from a consumer segment perspective? You just look at the last 5 years or so, we've seen an explosion of commerce being done in ways that you probably wouldn't have envisioned 10, 15 years ago. You're starting to hear more about connected devices becoming pragmatically being used, whether that's smart devices. We hear a lot about connected cars, and I don't think that the promise is quite there yet, but in the future, certainly more of these connected devices will do your everyday commerce activities without you thinking, I need to make a explicit payment. It'll anticipate some of your needs and ask you for, do you confirm a payment confirmation, and is there a gesture? Is that enough form of authentication for you to agree to a payment? Some of the stats that we point out, I think that are quite dramatic, is that analysts suggest that it'll be a tripling factor of connected devices by 2020, and you'll see that whether they're smart devices in your home or outside of your home in cars or in other facilities. Right? We're starting to hear from some governments that they want to actually create more smarter cities, and that could be things that you thought like roads that weren't necessarily smart being to be now connected. And so can that be a commerce vector point, which raises even more questions as to how do you secure that for consumers, right? The promise that we Visa make is that we want to make sure that our consumers can transact securely anywhere they choose to do so. So it makes our jobs and our partner jobs even more difficult, because we have to think about how do we do that in ways that create a frictionless and maybe even an invisible experience for the consumer. Alibaba continues to do record numbers every year. We hear with Alipay that they're continuing to grow outside of their market to service domestic Chinese consumers who are traveling across borders. And so I think these are just interesting stats about consumer interaction is starting to grow far more than we would have anticipated 5 years ago, and certainly has welcomed new competitors into the space that we would have considered in many of our markets outside of domestic China 5 years ago. What does that mean, though? I think, back to my original point about consumers are driving much of these propositions, and effectively they'll choose whether they become successful or not, is that some of the data that we've pulled around consumer interaction is that merchants are supporting those choices. By and large, online merchants are crafting experiences because consumers are driving what works, what doesn't work. So by far, it's the number one reason why merchants are adding new payment types and new ways for consumers to interact is it's just becoming an expectation that consumers find new payment methods or methods that they feel comfortable with as the driving factors to why they choose to kind of commerce. Certainly one of the factors. And in just pockets of some of our largest markets here in Europe, we see that options is very important, right? Again, driving the initial point about enablers for commerce is that choice is important. Some of our domestic markets in Europe, credit cards and debit cards are certainly not the first choice of payment. We see PayPal certainly as a first point of payment. We see direct debit or redirect models for bank payments as first choice. We think choice is certainly going to be important, and we're reflecting those choices with our consumers as we're driving experiences with our merchants. Well, how does that fit into the world of PSD2, right? The narrative that we continue to believe is that consumers will drive what succeeds in these models. Certainly the EBA has put out mandates through the regulatory technical standard around what will be required from a secure customer authentication perspective. And this is just a couple of highlights. If you've had a chance to read the RTS, you would see it's actually quite complex. It's very lengthy, and there's been numerous updates to the draft technical standards. And just of last week, it's been finally published. And so now we're all working towards a date. It's the 14th of September 2019 that the regulatory technical standards are enforced. And so merchants, certainly issuers and acquirers and gateways and PSPs are working towards that date now. What do we see from a customer authentication perspective? Certainly, two-factor authentication is going to be seen in more transactions than you would have seen before. And so in markets like the UK, where Visa and MasterCard and the other schemes introduced risk-based authentication, you'll see more likely merchants having to prompt their consumers for two-factor authentication. That raises a lot of concerns, questions about what does that mean from a consumer perspective, and we'll talk a little bit about that today as well. Those have to be unique factors, right? So two of the three, whether it's something you know, something you have, or something you are, have to be asserted in a transaction. So part of Visa's efforts over the last couple of years has been with industry. We went to the EBA to say, we think that risk-based approaches are important. We want to make sure that we're not doing a one-size-fits-all approach towards risk. Certainly risk is very much a measure of convenience balanced with security. And we were able to at least craft several exemptions that we think are pragmatic and that support consumer convenience, but at the same time share a balance of maintaining lower fraud overall and consumer protections, which we think are absolutely important to ensure that this marketplace maintains a mature set of choices, but also that consumers feel comfortable using their payment method of choice online. There will be opportunities that merchants are going to explore, things like whitelisting, right? The concept that the RTS outlines that consumer can trust specific merchants for their online transactions. How that actually works, we're working through proposals at Visa, and we're partnering with a number of our acquirers, issuers, and merchants about how we would create such a solution. So we've got draft concepts that we're working through currently across a number of our European markets, and seeing which one of those paths do we think would be the most sensible approaches for implementation and making that ready by the September 2019 timeframe next year. There's other approaches to support secure customer authentication or trying to avoid secure customer authentication on every transaction so that you're not creating a friction experience. And those are exemption models. Low value payments, certainly, that if you're a consumer and you're buying online, the RTS outlines that after the 5th transaction, you must assert strong customer authentication. If it's above 30 euros, you must assert strong customer authentication. And certainly, if it cumulatively adds up above 100 euros, you need to assert strong customer authentication. this raises a lot of complexity, certainly from a merchant perspective on if they're looking to raise an exemption, you have to keep track of the amount of each of those transactions a consumer is transacting with, the number of times they've done that, and the number of times that they would reach cumulatively to 100 euros. Certain segments, certainly in the airline travel segment, will likely go past those thresholds on the first transaction. So one of the things that merchants are certainly asking Visa is, how applicable really are some of these exemptions for my type of business? And if they're not, what other ways can I make sure that my customer experience is not negatively impacted? Because they believe that their competitors in the same segment will look at tactics and ways to make sure their customer experience is the most optimal as possible. And then I think the other area of interest that Visa pushed heavily on was, we think there are certain segments that, because they're low risk and because that risk is managed extremely well, they should be out of scope for secure customer authentication. So we were able to do several exemptions or out of scope exemptions within the RTS. And those include things like merchant initiated transactions. So if you're buying online groceries, for example, for a click and collect, and the merchant has to make an incremental auth because there's certain products not available or they did a replacement, those would not force a second authentication for you as a consumer. Certainly if you think as a consumer, they may not be available at their phone or at their desktop to complete that authentication. What does a merchant do? So we thought it was important that we made sure that operational processes merchants have today don't necessarily break because of customer authentication. We think that risk is certainly managed well within those environments already today. Mail order, telephone order transactions, so certainly a lot of catalog order and phone ahead order transactions happen today. It's actually still quite a large segment that we believe that merchants don't have solutions available today readily that make a strong customer authentication done in a secure way. And so certainly as advancements happen in that space, and if fraud truly is an area of concern in that space, we think that innovations may drive ways to support customer authentication in that space, but we believe that fraud today in that segment is extremely low, and more of these transactions are moving towards online mechanisms versus telephone and online orders through manual means. And then one-leg transactions, right, where acquirer, the merchant of that merchant, is sitting outside of the European Union, and that was an exemption that the EBA had already mandated. We wanted to make sure there was clarity. Some of our multi-market merchants who process outside of the EU were very concerned that some of their transactions and that their user experience would be negatively impacted, particularly in the online travel agency segment. So what have we been doing around PSD2, and certainly what have we been doing for the last 15 years? We believe that we've been supporting strong authentication, and there's certainly mandating authentication in other markets is not new to us. We've seen it in other markets across Asia and certainly across the globe. There's certainly more interest around doing more strong authentication to protect consumers. We've seen an increased amount of adoption, particularly in the UK, around 3D Secure, and we've seen a substantial amount of fraud reduction because of that. So we have a tool set which we call 3D Secure, what we've labeled Visa, verified by Visa previously in the past. You've seen MasterCard have something similar, you've seen Discover, you've seen American Express. All the card networks have adopted what was originally Visa's patented technology around 3D Secure, which lowers the fraud levels and increases the authentication and strong trust that consumers are transacting in a way that adds assurance to issuers that, in fact, I can authorize these transactions. We see in some of our higher segments where fraud certainly occurs, in the airline, in the hotel, online gambling sectors, that a strong reduction of fraud in this segment, right? You can look at just simply gambling, that it's nearly 70% lowered on an annual basis because they've asserted authentication. So we think certainly authentication is a good thing, but how do you deploy it, and do you need to deploy it on every transaction or in a risk-based approach? And then so if you look at some of the statistical numbers that we've put together around, well, how does risk-based authentication actually work? The concept is actually quite simple, right? That there's enough data that's provided back to the card issuer to say, I as a merchant believe that, and I'm attesting that I believe that this consumer is legitimately there, present to do this transaction when they're conducting a card not present transaction, and that this will be a legitimate transaction. And so we've seen a number of approaches in other markets where they've used authentication, and you see the reductions on single-digit marks on being able to lower abandonment rate. And so we think that's a good thing, but if you look at the dramatic increase and reduction in the UK, we've seen reductions up to 70% across sectors for the UK. So certainly quite different, right, from single-digit abandonment rate successes to the UK, where they deployed risk-based authentication that we think, pragmatically, we think consumers like that experience. They don't want to be forced to authenticate on every transaction. I think, just as a consumer myself, and certainly most of you guys would agree that when you're transacting online, you want to be able to give enough information back, but not have to put in all of the details in order to transact. It certainly would add a lot of friction to the experience. And there's a lot of lessons that we've learned in general from our first implementation of 3D Secure nearly 18 years ago, is that communicating to customers is going to be absolutely important about the expectations of what they should or should not be doing. And so we're working very heavily with our card issuers to make sure that messaging for 2019 becomes very much in the eyes of consumers, that they will likely see more authentication happening because of regulatory requirements, but also that we're going to try to make it easier for them by giving them tools to make that authentication a little bit easier. Certainly, one of those is issuers are going to be working with consumers who haven't enrolled for 3DS currently with their credit card to do that through their own channels, right? So we're getting rid of this idea of active enrollment during purchase, right? This was an experience where you could go before, you would make a purchase online, and if you weren't recognized as a consumer with your card, you would go through an enrollment process with your card at that time, which actually created a lot of friction, created a lot of abandonment, and it was not successful by and large. And so we've moved enrollment out of that flow completely. Certainly, I mean, the other big vantage point that 3DS 2.0 and the work that EMVCo, who's been chairing and running the specification work to bring it to the market, has been, we need to make sure this is not only just mobile first, but also IoT first, right? So abstract the user experience designs from what we built 18 years ago to focus on just desktop, big screen format, to make sure that it scales for formats for native apps, and apps that can scale for IoT devices, or even in devices that will be headless. They don't have a user experience that's visible. It could be a digital assistant, audible, or text-based approach. And so we're building in mechanisms so that our issuers can support those capabilities without having to think about building bespoke capabilities just for their cardholders, but create a shared set of utilities. And another aspect to all this is really around how do you authenticate the consumer themselves? We're pushing strongly that issuers should be looking at a number of range of choices consumers want to use. Certainly, fingerprint and biometric authenticators are becoming more prevalent for consumers. We think that issuers should be supporting those modes of authentication so that consumers don't have to remember passwords or get a one-time password if they're traveling and their mobile phone won't give them the SMS. What do they do in that case, right? Maybe they choose to use something else like a biometric authenticator. Well, so how does it work, right? If you're familiar with 3DS 1.0, right, the authentication rails, they sit outside of payment completely, right? We built a set of APIs that are standardized within EMVCo. So you're certainly familiar with EMVCo, who released chip and pin 25 years ago. The chip standards around contactless have also now adopted non-chip-based technologies like EMV tokenization and certainly 3D Secure 2.0. And so actually the concept is quite simple. It's that the consumer would start, whether they're on a mobile device or an IoT device or a tablet or a laptop, and they'd go to a merchant of their choice to start wanting to purchase their items. They'd add their items to a shopping cart, and they would say, I'm now ready to pay. And that experience could be very simplified where the merchant already has your card details on file or you're typing in your card details. Once that happens, merchants would gather invisible data, whether through SDKs or take data off of your browser, and they would be able to share things like your device information that's publicly available today, as well as information about you as your consumer. For example, the tenure of your account activity with that merchant, and share that to the issuer in an abstracted form to say, I trust this consumer. I know this consumer because they've transacted with me the last 15 months. They've done 100 transactions. In fact, the last transaction they did, they spent similar amounts that they're purchasing today and similar type of products today. And the idea is you create a strong assurance set of metrics that you can share back to the issuer. So there's 100 plus new data fields that are now available versus what 3D Secure 1.0 had, which was roughly under 10 fields. So we've increased over 10 times the value of data that merchants optionally can share back to issuers so that they can authenticate the consumer without having to assert an explicit authentication mechanism. And so that data pooled together in a secure way is sent over APIs to Visa's directory server. We send that data back onto the issuer. And that issuer has a service called a access control server that takes that data, ingests it, and makes a risk decision ultimately. And they have two consequences of that risk decision. If it's a low-risk transaction, they can simply say, fine, I'm going to go back to the merchant within the API and say, you don't need to authenticate the consumer, you can have them go through a frictionless experience. And so we think that's going to reduce the amount of time that the consumers will have to do anything else, certainly, and then increase the abandonment, increase the lack of abandonment rate again, as you've seen in the UK market, in double-digit growth areas, so that merchants are getting what they're expecting, which is conversions, and certainly consumers are getting through in a convenient way with high assurance that they are who they are. And in the case of a high-risk profile that the issuer comes up with, they have different ways to authenticate the consumer, right? Depending on the device's capability and the consumer's opt-in, it could present a biometric authenticator. So the consumer says, I feel comfortable using my fingerprint or my face or what other form of biometric that's available on the device, and I've opted into doing that, then they can go ahead and use that form of authentication. Or there may be fallback mechanisms. They could get a one-time password, or they may be able to do device certificates. We think that this area of authentication will have tons of innovation, and we think that we don't want to limit those forms of authentication choices that consumers ultimately will make their own choices about. And so as new form factors come about, we could see perceivably, on a digital assistant, you may be able to use your voice to authenticate. And so while that's not there today, we think that in the near future, that certainly could be a possibility, and we want to make sure that the standards that support that today allow for issuers to make those choices and support the choices for their consumers. So again, the way that we're looking at this is that consumers are centric to this model to support their experiences with their merchants. We want to make sure that consumers can go through an experience in a fresh, new, modern experience versus what we think are experiences in the 3DS 1.0 world as very static and very much built for big screen laptop formats. And so we're now supporting certainly mobile, but then also IoT devices in the future. Being able to support consumers to get through those experiences faster than they did before. So we've enhanced the technology of 3DS. There's less calls in the APIs itself, and so there's been a lot of optimization in the specification itself, and that merchants can make sure that one of the concerns they had was speed has to be important. There's no latency between the time that an authentication request happens and the time the authentication response happens back from the assurance. So there's a lot of things that we're working to optimize that, and we're running several pilots to test that model to make sure that that actually works between now and next year. And certainly, again, the concept of authentication to support the RTS and the PSD2 mandate itself is that we allow the consumers to choose the strongest authenticator that they want to choose to make sure that issuers are managing their risk appropriately and that merchants are certainly not bearing the risk of those transactions when authentication is actually performed. And then in the last point really is around supporting our merchants and our acquirers in that we believe that there's also opportunity that merchants will want to make sure that they can assert, that they can exempt where consumers are saying, I trust my merchant, I don't want to be authenticated on every transaction. And we think that set of choices is important, and we're looking at enabling technology to support a wide range of merchants to be able to make those choices as their consumers want to whitelist and provide exemptions. And so technically we're working through those options today. Glad to field questions after this event with you. If you're interested as a merchant about how you can explore that, we'd love to be able actually to partner with more merchants to think about, do those models work for you in your specific segment, for your specific merchant type? And Visa is very interested to have those type of discussions. So to speak on that point specifically, right, Visa has made liability shift dates out there for next year. April 2019, we are putting out liability shift mandates effectively to bring up to market, much like we've done for 1.0, that we believe that ensuring that merchants that are doing the right thing, certainly for PSD2, but also protecting cardholders, should not bear liability because they've done everything that they needed to do. And so similarly to what we've done for EMV, Visa is putting out a liability shift date of April 2019 that where merchants have deployed 3D Secure 2.0 and are sending in authentication requests, issuers must be ready by that date to support a 2.0 message. And if they're not, and it subsequently turns into a fraudulent transaction, that the issuer would bear the liability of those transactions versus the acquirer in that transaction. So if you're familiar with 1.0, that certainly is a very similar model, but we're now supporting it across both 1.0 and 2.0, and that will be effective April 2019. And so merchants that certainly will be fully supportive and move towards that April 2019 date will be ready, and we believe that Visa is going to provide mechanisms to support that, right? We're looking at ways that for issuers who are not ready, we may be providing on behalf of service as Visa, just to make sure issuers who can't technically get ready, we will do that on their behalf. We're very much focused on this point of enhancing consumer experience. We're hosting roadshows, and so Visa's hosting a more deep dive PSD2 session here in the UK later in April. Glad to share some of that information if you're interested afterwards as well. And we're doing that broadly across Europe as well. We want to make sure that for a number of segments, particularly airline and online retail, that we're making sure that this experience and that consumers that want to trust their merchants through whitelisting, or merchants that are working through their acquirers that are looking for transaction risk analysis exemptions, that we provide the right mechanisms to support our acquirers, merchants, and issuers. And we believe, with the way that we've worked through 3D Secure and the consultations that we've had, is that 3D Secure 2.0 will be the path forward for merchants to support card-based transactions. And so because it's an industry standard, you as a merchant can code in once with your providers or yourself directly, and you can support all of the major card network schemes and not have to do bespoke custom development that you would have had to have done with 3DS 1.0, right? And so EMVCo is working towards a set of testing and certification paths today that your providers on the merchant side can go and certify once and make sure that your providers are ready so that by the time that PSD2 becomes effective next year, you can flip the switch on to make sure that you are in compliance with PSD2 for your online transactions. So we're working heavily right now really on rollout. We've been piloting with a small number of merchants. If you're interested, certainly as a merchant to pilot, we can have a conversation about your specific merchant type, and we can connect you with the right product team folks to see if you're interested to be a pilot participant. Why is that important? Certainly, we have a limited capacity at Visa to do this directly with merchants. We don't typically do this, but as I said earlier, Visa is more engaging merchants directly now. We want to learn from merchants about what are some of the pain points that you're having with your consumers around authentication, certainly 1.0 issues that you would have had in the past. How do we make this better? What tools do you need to support that? Can we work with your acquirers to provide those tools, or your PSPs to provide those tools? And so between now and in April of next year, we're running a series of pilots with full integration so that you're ready for 3DS 2.0 when you do want to roll it out next year. By April 2019, as I mentioned earlier, the liability shift for Visa does kick in. And so we believe at that point in time, merchants that have already coded in, there'll be a leg up. Certainly, the consumers that are going through your mobile experiences, or if you have other experiences and other type of devices, they will be able to transact as they normally do today, but in a PSD2 compliant mechanism by September of next year. And then we think that there will be a wider set of adopters that happen by mid to late next year when the RTS mandate becomes pressing by September. We're going to see a ton of merchants who will have wanting to go through implementation. And the only thing we would preface is that don't wait until the 11th hour. Certainly your vendors and the solution providers that are integrating are going to be overwhelmed next year, particularly because of the PSD2 mandates, and many of these providers are global, that they're going to have a lot of interest from some of the multi-market merchants who are going to look at implementing 3DS 2.0 mid next year. And so my only caution would be engage early, and we can help you work with your acquirer or your PSP to try to see if there's a pilot opportunity or figure out the timelines of your providers to see if we can help urge that along so that we can make sure you guys are ready as well. So with that, I want to thank you certainly for your time. If there's any questions, I can certainly field them after this session. And if you have an interest in piloting, I certainly could entertain those as well and work with you moving forward. So thank you again for your time.